the impact of those early rate rises are yet ready to hit household bank accounts. But already the property market is easing back. My own predictions are, I think, a 20% fall in Sydney and Melbourne over the next year to 18 months is quite likely, but it could be quite a lot worse than that in some areas.
Do you expect falls across the board or across the country, or will smaller cities perform quite differently to Sydney and Melbourne?
Well, what tends to happen is that Sydney and Melbourne lead the charge, but others follow. And we're actually already seeing in the latest data easing back in Perth, even in Tasmania. South Australia's hanging strong at the moment, but I don't think that'll last for long either. So I think it's going to be countrywide, but with those major centres leading the way, and Brisbane not far behind.
This week, the RBA Deputy Governor said borrowers have enough buffers to cope. But how many people do you think will be facing mortgage stress?
Well, I think there's a big problem with this buffers argument. So a lot of the buffers are actually with people without mortgages. So 1/3 of households have a mortgage. Within that, around 30% of households are already paycheck to paycheck in terms of making those mortgage repayments. My own stress numbers are around 45% of households with some difficulty at the moment. That's 1.6 million. As rates rise, that's going to go higher. And the problem is, of course, that it's not just the bigger mortgage, it's also the inflation that's creating a huge amount of financial pressure more broadly. And I measure stress in cash flow terms, money in, money out. And real incomes have not grown at all for many people. So this is going to be a very, very painful time for many people, particularly those who've bought relatively recently.
RBA's modelling suggests that if house prices were to fall about 20%, the share of loans in negative equity would rise to 2.5%. What do you make of those figures?
I think that's optimistic. It's a little bit stronger than that. I think it's probably 4 or 5%. Remember that quite a few people got those new loans with a very high loan-to-value ratio because the government incentivised them to go in with a very small deposit. And we're also seeing some prices over in the West, in Perth, still lower than where they were when they bought them many years ago. So this negative equity story is going to, I think, become one of those very important thematics. But, it's going to take a bit of time to work through. And of course, the problem is that it does take time for people to really wake up to the fact that they've lost all the savings that they put into the property in the first place.
Where does this put us in place of fire sales and property defaults?
Well, the default rates are already rising. So if you look in some of the postcodes in Western Sydney, we've got default rates already in arrears at somewhere around 3 to 4%. And that's actually quite low relative to what you might think nationally, but in those particular postcodes, it's already rising. And my own estimation is that mortgage stress is an early indicator of problems later. Let's assume mortgage rates continue to rise. Let's assume that there isn't a magic silver bullet from very strong pay rises. These default rates are going to go up. But the other thing that's happening is the banks are now having conversations with people saying, hey, look, your financial position has changed. You should plan to put your property on the market and get out because prices are still higher than they were. And in fact, the banks are doing that because what they don't want to do is to start reporting higher bad debts. And so if you can encourage people to get out with their shirts, the bank wins and the household potentially wins. But of course, it does artificially keep those numbers down.
If we've got mass fire sales, price falls in the realm of 20%, where does this leave first home buyers?
Well, some of those first home buyers who bought recently will be in a very significantly painful position because they got very large loans. The banks, of course, were very keen to lend up to the max. Many households, first-time buyers, didn't do the maths themselves in terms of what happens when rates go up. They sort of assume that if the bank says yes, it must be okay, not necessarily so. But for those people yet to enter in the market, this does potentially offer a potential way forward. But I would say, hold on, don't jump yet. Prices will be lower, rates will be higher. Just wait and see how this shakes out, because I think this is not going to be something that's going to get fixed in 6 months. I think this is going to be a 2 to 3 year journey. I think the expectation must be that prices will continue to go lower rather than higher from this point, whatever the real estate sector may say. And so if you are a first-time buyer, sometimes not doing something is a better option than doing something.
Martin, the RBA had signalled for some time that rates wouldn't rise until 2024. How much responsibility should it bear for the property price explosion that we saw?
Well, it's quite clear to me in my surveys that a lot of people took that at face value. And of course, the markets did as well and the banks did as well. So I'm afraid that the Reserve Bank can't just say, well, the data's changed, so we didn't actually get it wrong, we just had new data. Unfortunately, I think there should be more accountability. I do feel that the Reserve Bank has taken us into a bit of a cul-de-sac. They left rates in the wrong setting for too long. They then dropped them dramatically, and then they misled people about what was going on. Those are very important signals that everybody has a level of trust, or had a level of trust for the Reserve Bank. I think that trust is gone. The question is, why would you believe them now when they say that rates are going up but not too much? The trust needs to be earned, and unfortunately, I think the last year or so has suggested to me that, well, trust is a rare commodity.
Do you believe them when they say 2.5%?
No, I think rates will go higher than that. I think the ANZ forecast this week is probably closer to the mark. Nobody quite knows. Of course, we're very much going to be influenced by what happens in the US with the Fed, for example. And of course, in other places too, the ECB just lifted by 50 basis points, which was more than expected. I think that rates will be a lot higher than people expect for longer. And I suspect that we in Australia will have to follow suit. If we don't, then the exchange rate gets too damaged.
Martin North, good to get your insights. Thank you.
Good to talk to you.